Now.
Excellent. All right. Well, good evening, everybody. And wow, what a great turnout. What a great crowd that we have here. Today, I just want to share with you something that has helped me with my trading, and especially now that we are in the earnings season. And so I thought that this would be a good time to share this information. Hopefully, it helps you with this trading season that we are currently in right now. But before I do that, I do need to make sure that we go over our risk disclosure statement. And that just simply means that we are not licensed financial advisors. I want you to know that I am not. I am simply a guy who has taken the time to study multiple things about the market. I figure out some things that works really well and some things that hasn't, and I stick with the things that work really well. And the other thing I try to do is simplify what I understand from what I've researched so that I can teach this to kids as well. And so I homeschool my kids right now. And part of the curriculum is that they have to take stock market classes. And so I have a 7-year-old, actually, she just turned 8 on Easter, which is 2 days ago. And I have a 10-year-old. And part of their, like I said, curriculum is that they have to learn the stock market. So a lot of how I present, a lot of how I teach is based on the fact that I want to make sure that they can understand it. And so if they can understand it, I hope that you guys can understand it too as well. All right. So I'm very proud of my kids being able to understand the stock market at the age they are right now. At this stage, I have full confidence that their future looks bright. They'll never have to work for anybody, never have to worry about how to make money as long as the stock market is there. So hopefully, again, a little bit about what I share here with you guys today would help you with your trading as well. So the agenda today is why earnings season, and we'll talk about earning results, good or bad, as well as earning phases for profits, and maybe more so the earning phases for profit more than anything else, is because at the end of the day, the biggest thing we want to do is make money, right? And so we'll see if we can discuss that. So let's do this. Oh, before I actually even jump into this, just so that anybody who's never heard of me before, if you're wondering who I am or anything like that, I usually have a slide that says that, but apparently I don't have this one right here. But long story short, I have been involved in the stock market since 2012. I was one of those guys that lost everything during the financial crisis of 2008. At that time, I was involved in real estate. And I was one of those guys back then that believed that nothing was ever going to happen. Um, well, thank you, Merkel. Merkel said, good idea to teach your kids. Great job. I appreciate that. Thank you. So I was one of those guys who lost everything in 2008. I believe real estate would always go up, never go down. And long story short, we all know what happened. I lost my money. But I remember during that time, I remember when it first started going down and investors were beginning to back out of these properties I was trying to sell them. And I was trying to figure out, hey, they were saying, hey, you know what? There's so much news about the fact that the real estate market is going to crash, maybe we should wait. And at that time, it was literally the first time I've ever heard of a real estate market crashing. And I had no idea what to do, to be honest. But I was doing my best to try to convince them, no, everything is fine, everything is fine. But deep down inside, it was one of those situations where I was trying to figure out, wait a second, are we really crashing or are we not? And so one minute I'll hear some analysts on TV say, oh, yeah, everything's going to be fine. And another minute I'm hearing another analyst saying, nope, we're going down the drain. And I really just did not know what to do. And then I remember Obama became president and he said, oh, we are in a good economy. Everything is going to be fine. And next thing I know, I'm like, okay, if Obama said it, I'm going to trust him. Everything is fine. We look back now and anybody would ask, you ask anybody now, was 2008 a financial recession or not? And they will all tell you in hindsight, yes, it was. But I remember very vividly while I was going through it, where there was back and forth, back and forth, back and forth. And I just got to that point where I said, I never wanted to be in that situation again, where I had to depend on what the media was saying to determine what was really going on. And my biggest thing was the people that said, no, we are going into a recession. I wanted to know what is it that they knew and what is it that they saw? And is it possible for me to learn those things too as well? So that way that never occurs to me again. Well, fast forward 2012, end of 2012, November 2012, now I'm getting involved in the stock market and I'm still thinking that we're in a recession, only to find out at the end of 2013 that the recession, or at least the financial drop, had bottomed in 2009. And I'm like, what? Why didn't anybody tell me? I mean, I've been sitting here for 3 years still thinking that everything is in a recession. And now 4 years later, I'm finding out it bottomed 4 years ago. And so I was just very, very distraught about that. I wanted to really understand how to understand the stock market. And so that's what prompted me to go do some research. So I've done a lot of research on bear market crashes so I can tell when the next bear market is going to happen without somebody telling me in hindsight. I want to be able to see that. So we've done a lot of research on that. I wanted to understand when the market hits bottom and everything in between. And so in that process, excuse me, I understood about earnings season and I wanted to learn how to use earnings season to my advantage. And so here's where we are today. But again, my background is in accounting, specifically in financial statement analysis. And so I've done a lot of financial statement analysis, and I use that to help me with my knowledge and understanding of the market. All right. Okay, so that's about me, but why earning season? Why earning seasons? Well, one of the reasons why I picked earning seasons is because we have this every single quarter, okay? It's gonna happen every single time. And I remember when earnings season first came out, I was the guy that would just jump in on earnings day and I didn't know whether it was gonna do well or not. It was always a 50-50 kind of situation. And I was a guy where even if the stock had gapped up every single time for the last 3, 4, 5 quarters, as soon as I jumped in, it went the opposite direction. And I literally thought people were watching me and all that kind of stuff that was going on. But then eventually I got to a point where I said, let me research this. Like, is there a pattern here? Is there something I can understand about earnings season that will help me become more successful in this? And that's when I discovered that, there's really 3 phases to an earnings season. The first one is what I show over here, which is what I call the pre-earnings phase of the earnings season. And that typically happens 1 month before the next earnings season. So anybody who doesn't know, here's something for you to know. Every earnings season starts at the beginning of each quarter. So say we have January, February, and March is the first quarter. We'll say number 1, that's the first quarter. Somewhere around, excuse me, somewhere around January 15 to February 15, typically, unofficially, but typically around that area is where you start seeing people talk a lot more about earnings, okay? So in the second quarter, quarter number 2 would be April, May, and June. Again, starting from around April 15 to May 15 is where you find the bulk of earnings seasons being reported. And so right now we're in April, which is the first month of the second quarter. And today's April 19th, and you can see that now we're beginning to hear a lot about earnings as well. And so that will probably go on up until May 15. Excuse me 1 second. Excuse me. That will go on to about May 15, somewhere around there. And then you will start hearing less and less and less of that until the third quarter, where we would have July, August, and September. So what would happen is July 15 to August 15, you'll start hearing about earnings again. So the idea is, how do we take advantage of what's going on? And so one of the first phases, like I said, that I realized is the pre-earnings season. And so what that means is basically market moves that takes place 1 month before the earnings comes up. And so here's a great chart or example of what I'm talking about here, whereby this blue dot down here is the earnings day. This is when they are going to make that announcement. So that kind of comes up right here. And what you'll see is about 30 days prior, you'll start seeing certain stocks, not all stocks, but certain stocks will start rallying prior to earnings. Now, why is that important? Well, it's important because if you understand this concept and you understand what stocks, or know how to search which stocks are going to do stuff like this, you can take advantage of that type of situation or those circumstances that appears. And so we like to look at that. We try to trade certain stocks that has that behavior pattern of rallying before earnings. And so that's pre-earnings, okay? Then we have the one that almost everybody is aware of, which is the earnings day itself. And so this is where everybody's looking for that big jump on earnings day, or if they believe that the stock is not going to do well, they expect it to drop big on earnings day. And so this is where you hear people say they made a lot of money in one day if they were on the right side of it, and so on and so forth. And so earnings day is the one that almost everybody understands. Matter of fact, when I first got involved in earnings, this is what I wanted. I was the guy who wanted to buy on this day because, again, I don't know if you can see this, but this blue dot down here is the earnings day. My goal was to buy it over here with the expectation and hope and wishing that it is going to gap up like it did right here. So if I bought here and I could sell up here, great. 1 day profit, huge amounts of money, so happy, walk home. But in reality, what happened was, more often than not, it didn't work the way I wanted it to work. Okay. And I will always see other people talking about how they did well, but mine just never worked that well. And so eventually I said, I don't think that this is for me. I had to figure out another way. So in my research and my studies, then I found a third phase of earnings, which is the post earnings phase. And again, there's some information about that out there that some people have talked about, but not as in depth as I wanted it to be. And so the post earnings phase is everything that happens after the earnings. And so that could take up to 2 months after earnings. So if earnings came out today, then today being April 19th, that means that there are opportunities in certain stocks that all had their earnings before today that would do well between now and April, May, June 19th. Okay, so being able to understand what to look for between now and June 19 on certain stocks that have already had their earnings today or prior is so key in understanding the post earnings phase of the earnings season. And so that's the way that we look at this: is 1 month before earnings, the earnings day, or up to 2 months after earnings. Now, I would like to, here's an example of what that is actually. So again, this is the earnings day itself. This is the post earnings day that we see here. Okay, so my goal is to, if I'm doing a post earnings, is to try to capture this move that takes place after earnings. And there's ways that you can capture this very, very simply, very, very easy. And hopefully that would help you out today. So I like to ask this question, and if you don't mind, you can help me out here. I'm trying to see where the chat box is so I can see if anybody types in anything. And that is, out of those three, the post earnings, pre-earnings, earnings day, post earnings, which one of those three do you believe is the most profitable, most manageable, and most risky? I'll give you guys like a few seconds. Just chat in the box, just help me out here. This also helps me to see that everybody's still listening, still engaged. Which one do you believe, post earnings, earnings day itself, or pre-earnings? Which one do you believe is the most profitable out of the three? Anybody? Which one do you believe is the most profitable out of the three? Okay, post earnings. I'm seeing more post earnings. Hey, Jürgen, is this the same Jürgen that's in Germany? Welcome. If you're listening in all the way from Germany, wow, that would be amazing if that's the same Jürgen that I'm thinking about. Yes, you are. Wait, great, man. Well, welcome, sir. Welcome, man. All right. I don't want to get into soccer, but just to say this, Jurgen Klopp beat Manchester City today, so that's great. Well, welcome. I'm glad to see you again. All right. So post earnings is the biggest thing that I'm seeing here. Thank you guys for responding. I appreciate that. And I would agree with you that post earnings, I mean, that to me has been by far the easiest one to do of them all. And here's the biggest reason why. You can write this down if you want to, but the biggest reason why I believe and why I have found post earnings to be the most profitable, most manageable, and the least risky, I should say, is because most of the uncertainty is already out of the equation. Does that make sense? Most of that uncertainty is already out of the equation. And so because the uncertainty is out of the equation, you get to see less of a volatile move in that stock. And that's, to me, is huge when it comes to stuff like that. So again, the three is 1 month before earnings, day of earnings, up to 2 months after earnings, and you will see what happens. Now, let me dive a little bit more into these post earnings, because that's the one I'm going to talk about today. Later on tonight, I have an offer that I'll offer you where you can get more information about the pre-earnings. I don't really talk much about the day of earnings itself, and I'll show you why, but I do more pre-earnings and post-earnings. But today I want to highlight the post-earnings for you guys to see. In the post-earnings, there are 4 different type of patterns that you can find when it comes to post-earnings. That simply means that market will come out, the stock would come out with an announcement, and based on the announcement, the stock would either gap up, right? It will gap up on earnings, and after it gaps up on earnings, what you will find is it will continue just going higher. And these are the ones that almost everybody wants to have. And so that's the ones that we call gap up and continuations. And there's a particular way that you want to trade those so that once the earnings comes out, you can literally just wait until earnings comes out. And then there's certain things that you need to see. Once you see those things, like, wow, chances now become very, 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 very high that it's going to continue going higher, as opposed to some where they gap up and then either immediately start fading away, or within a couple of days, a few days later, you start seeing them fade back down. Okay. And that gets a lot of people into trouble. So it's very, very important that you understand that those 2 situations occurs whenever a stock announces earnings and the stock gaps up, that it could continue or it might actually fade. And so being able to be aware of which one is actually taking place is going to be very critical in being able to be successful when it comes to trading these post-earnings trade. Now, the second thing you might have is earnings announcement comes out, the stock gaps down, and then you'll see continue just dropping like flies. This is one of those where it's just like, you just got to get out of Dodge because something horrible has gone wrong. Again, there are certain things that you will see that once these certain things starts happening, chances are very, very, very high it will continue going down. All right. And so it's like, get out, get out, get out. But then there's others which actually will gap down, and it will go down for a few days, maybe a day or 2, 3 days, maybe a week or something like that. And then what you will find is that they will start reversing back up. Okay. To me, those are my favorite. Those are my favorite. And what I found is that the ones that typically do that are the ones, if you ever heard about a company, excuse me, where they announce their earnings, right? They beat top and bottom, and they have good forward guidance. You ever seen that? So they announced their earnings. They came out saying, hey, they beat on revenues expectations, they beat on profit earnings expectation, and they had good forward guidance. But for whatever the reason is, you see the stock keep on dropping. You ever seen that? If you've ever seen that, that to me is one of those that you want to pay attention to, because usually those are the ones that will end up, they will gap down, go down for a little bit, but then somewhere along the way, they start reversing. The problem is most people have already forgotten about them. And it's always so interesting because there's always going to be something that they would say, like, say, after that happens, they might say, oh, yeah, they beat top revenue, earnings is great, the future forward guidance is great, and all this kind of stuff. But then what will end up happening is they'll say, oh, but subscriber base was not great, right? Subscriber base is not great. And then so you see, because of that, the stock is dropping. But I said, don't be distracted. Please do not get distracted. Okay. Pay attention to the ones that says earnings beat, revenues beat, good forward guidance. And and then if the stocks drop for whatever other reason, pay attention, because I'm going to show you what to look for. Now, how does this help my kids? My kids don't listen to the news. They don't know what the news is saying and all that kind of stuff. So I don't even tell them about paying attention to earnings beat or anything like that. At this age, they don't know about that. I don't teach them that. But what I do show them is what to look for when these reversals take place. And that's something that everybody can learn. Okay. So here's an example. Excuse me 1 second again. Sorry about that. I had to take a cup of water. So here's an example of what we talk about when we say gap up and fades. And so you'll see something like this where Again, this blue dot here signifies the earnings date. This is the day before earnings comes out. You see the stock go up. They might come out and say, oh yeah, good forward guidance, earnings beat, da 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 da. Everything is great, but subscriber base wasn't there. But they didn't meet delivery expectation, but they didn't do something else, right? And so what ends up happening is this happens. This is that gap and fade, all right? And so you have to be aware of that. You have to know what's going on. Again, I'll show you, hopefully I'll show you what I show my kids, because again, they don't know all these stories and stuff like that, but I'm gonna show you some things that I show my kids that helps them. All right, so that's what a gap up and fade is, right? Now, if you're the type of person that didn't know that these things could happen, you end up seeing that this stock gaps up, you start buying here and end up losing money, right? And we don't want that happening to us. Here is a gap up and continuation. So in this case here, we had earnings here. Again, it gapped up, and then watch what happened. It continued going higher. I love those as well. Here is what a gap down and continuation looks like. So earnings day was here. It gapped down, and what did it do? Continued going down. Now, if you're interested in profiting from shorting stocks, again, this could be very, very profitable. And one of the reasons why I like these two as well is because once that starts happening, you can get some serious money, because a lot of people should start dumping stocks like this, okay? But my favorite, my absolute favorite is the next one, which is what I consider to be gap downs and reversals. And this is the one that I really teach my kids, the gap downs and reversal. So to me, again, I'm not sure if you can see this blue dot over here. Hopefully you guys can see it. And so the whole thing about the gap downs and reversals is that I just tell my kids, I say, wait, look, there's going to be a blue dot. They know what the blue dot is, which is earnings. And then wait for a few days to a few weeks. Okay, a few days to a few weeks. And then what you'll see is that they have a setup that starts happening, which I show my kids what these setups are. And then you start seeing the stock really rally up again. And again, I love this. Now, for you guys who are more advanced or older, can understand and comprehend this better than my kids. Part of that is, again, you hear a stock that had good earnings, they beat the top, bottom, they have good forward guidance. And if anybody's ever, I mean, I don't know, maybe it's just me, but if anybody has ever seen that situation happen and said, man, why is the stock going down? They beat top and bottom. It's like, man, this thing is all rigged now. It doesn't make any sense. Chances are you're missing out on what is about to happen, okay? And that's kind of like what this is all about. So let's go to the charts, and then I can show you a few examples on the chart, all right? So what I'm gonna do here is I'm going to bring up my Thinkorswim account so you guys can see this. And let's go here to Apple. Apple is one of the stocks that I use predominantly for the pre-earnings. So what I'm going to show you here is the pre-earnings. And so what I did was I just showed you, I'm going to show you, we're going to start from 3 years back. I mean, I could go even further back than this, but I'm just going to go 3 years back and show you guys this concept of, this pre-earnings rally. So if you recall what I said, about 30 days, somewhere between 40 to 30 days prior to the earnings, if you pay attention to certain stocks, Apple being one of them, if you pay attention to certain stocks, they have this tendency of stock going up in price. And so here's an example of Apple. If you look over here, this is Apple having earnings on July 30th. So 30 days prior to July 30 would be June 30, which would be somewhere around here, okay? This is June 30. Now, again, it's about between 30 to 45 days. So you could go even as far back as back over here, but somewhere between here and here, something starts happening with Apple. Now, there's so many different theories out there. It could be the fact that institutions know that they're coming up with earnings, and so now they want to start jumping in. They want to start getting involved. Again, this is something that a lot of people know. But for those of you guys who don't know this, somewhere between 30 to 45 days prior, you can start seeing this happen, right? And one of the things I love about this is because you already know the earnings is day. I mean, they let you know what earnings day is ahead of time. And so what you'll see is that certain stocks starts rallying 30 days prior, somewhere between here, you start seeing that you can capture some profit in stocks like this. And the reason why I like this is like it's very, very safe. You can start seeing what's happening. And interesting enough, I want you guys to see this because this is the earnings that everybody's shooting for. They're waiting for this gap up that's going to take place between, let's go here, between here when earnings close and maybe they open, right? Which would be over here. So that's what they are all looking for. They're looking for this move, this percentage move right there, right? That's what they're looking for. Let me actually try this. I'll do this here. Oh, nope, not that one. Let's try this. So I'll draw a line from here to here. This is the distance that they're trying to capture, right? And I'm saying, wait a second, if you are aware of this phenomena of stocks that actually rally before, you can actually find stocks that can do the same thing. It just takes you a little longer. So I get the fact that it happens in one day, but to me, you can, find the stocks that does something like this and still get the same amount, if not maybe even more. So something like this, you have something that goes up like this. This is the kind of return that we're talking about, right? So we can take this one day, and I get the fact that it's one day, and so there's nothing but what everybody is gambling about in one day. This move that they make in one day, which again, nothing to put down in whatsoever kind of way. This is good money if it works your way, right? The problem with that is you have no chance to fix anything if it doesn't go your way. Okay, because the announcement comes out overnight, the next morning, it's either you made it or you didn't make it. Whereas with something like this, it's a whole lot more manageable. It takes a little bit more time, like I said, but I like this better. To me, it just gives me more confidence because I know how to manage this a whole lot better. And I can make just the same amount, if not double, in some cases, triple, quadruple what you will make on earnings day itself. But every time that I can get into trades that are going to do well prior to earnings is a whole lot better. So by the time I've done something like this and I made some money, I'm not so worried about whether or not I capture what happens on earnings day. Does that make sense? And that's the beauty of this here. Now, just so you know that this is not a fluke, let's fast forward. I've marked what next earnings is. Here's the next earnings on November 30. I mean October 30. If we go back 30 days, it would be September 30. Okay, 45 days would be about September 16th. So somewhere between here and here. And then I want you guys to see again what was the earnings that took place. Everybody is jumping to see if they can capture good money from here, which is the day that it closed, maybe till where it opened the next day. That's the distance that everybody's looking for right here, this distance right here. But for those of us who have understood this concept, which is again what I teach my kids, they know what the blue line looks like. They already have a list of stocks that they do this on. They say, okay, they have this on their calendar. It pops up 45 days before and says, here are the stocks that you need to go pay attention to. They go looking for this. And then based on the things that I teach them, as far as like the setup, they can start seeing, hey, wait a second, we can start buying somewhere around here and make this type of money. Okay, 7-year-old, 10-year-old, learning how to do this stuff. We can get this type of return, or we can worry about this type of return. Look at the difference between this return and this return here. And the return here is such a gamble that it's 50-50. Whereas with this one, you have a better chance, okay? Because if we don't see the setup, we don't have to jump in. And that's the beauty of this. If we don't see the setup, we don't jump in. If we see the setup, we jump in. Then we can manage this every single day to make sure that nothing goes wrong. This one right here, you have literally one day and one day only to do this, all right? And then not to talk about the post earnings that takes place after that. And so this is why I don't even focus on the earnings day itself, because this little bump is what I call it. Yes, are you going to find some stocks that gap up 20% in one day? Yeah. But honestly, if it's not worth it for the ones that you can capture consistently doing this type of move. Does that make sense? And so to me, I would rather focus on understanding the patterns and the setup that tells me, yes, this is going to happen. And then, yes, this is going to happen, as opposed to trying to see if I can risk jumping in the night before, not knowing whether it's going to like poof, gap all the way down, as opposed to gap all the way up. Hopefully this makes sense, right? So let's fast forward again to the next earnings. You can see this again. Here is the earnings day. What are people trying to capture? This right here is what they're trying to capture. Or you can go back to the 27th, somewhere around here, and capture this type of move. Type in a Y if this makes sense to you and this is like more exciting than trying to just capture the earnings day itself. Because to me, when I came to this understanding, thank you. When I came to this understanding, I was like, wow, okay, I don't have to stress myself out over earnings. And so before I even discovered all this, I used to be so nervous. You know what I mean? The first day I was excited. The first time I should say I was excited because, you know, I was brand new, trying to do what everybody was doing. But after having losses after losses after losses, it got to a point where I really started dreading earnings season. Now I don't. Earnings seasons are one of my favorite times of the year because I know this is when I get to really make some good money in the market, really make some good money in the market. Okay. And this is just the pre-earnings situation here. All right. So I hope this makes sense. Thank you guys for responding. I appreciate that. I'll just fast forward just a little bit more. Let me do this. Here's another one. This is the earnings date. You can see the rally going into earnings, right? I love, love, love that. What is the key element that you need to see in order for you to understand that this is happening? Quite frankly, it's a certain type of setups that you need. Here's one of the biggest gaps that we saw. But again, you can go back and you look over here. You just made just as much, if not more. I actually have a rule that the only way we will stay in a stock over earnings because we've made a certain percentage over the pre-earnings. Otherwise, we stay away from it. Okay. Now, there are certain things that will also happen where they start rallying up, but then they start fading out. And this is why I say it's really, really cool because we can see what we need to know that would tell us, hey, wait a second, this is beginning to go down. Either take your profits or stay away from trades like this. All right. I'm just going to click on fast forwarding. I want to fast forward to, again, let me just show you this. I'm not making this up. You can go back and see this. This is the pre-earnings rally that took place there. Let's go to the next one. Look at this pre-earnings rally that took place there. Okay. Here's another pre-earnings rally that took place there. This one did not work out. So this is where the most recent ones that did not work out, okay, was this year. And we all know what's happened this year. The market has been kind of like, not really good. So we can blame it on that, but let's just even say we didn't blame it on the market or anything like that. All right. This is where I said there are certain things that we can see where it's like, even if it doesn't work out, we can capture those things before it happens. So here we were around here, which is around close to the end of the month. Somewhere around here was when it first started moving up. It was doing well, doing well, doing well. And then we started having issues. Once this started happening, which is all the stuff that I teach, and you can see these things, very simple ways of seeing them. We knew that something was wrong. Did I know that it was going to drop this big? Not really, but I knew something was wrong. It wasn't doing what it needed to do. And so it was time to get out. And then most recently was we have earnings coming up pretty soon. Market had been doing well since March, okay, which is the 45 days prior, did really, really well. And then what has it been doing? It's been fading off ever since then, okay? So again, really good money when this one happened back on March 15. We saw this around March 15, March 16. It was like, wow, okay, this is part of that pre-earnings rally that is happening to Apple. Right now, did we know how high it was going to go? Not necessarily, but we knew that the move could easily be taking place. And so once we had the setup that we were looking for, boom, we knew that the market was ready, or at least Apple was ready to go higher. And then somewhere around here, I believe it was either around here was when we sold, saying, look, this is not doing what it's supposed to do. It's time to get out of the trade. And so we've been out of Apple for now. Now, it's not over yet because there's a post earnings rally that also takes place in Apple. So that's something that we'll be paying attention to. But the excitement of knowing that prior to earnings season, you can start jumping into some trades. Post earnings, you'll see that too as well. Okay. All right. Let me show you the one for post earnings. This is the ones where I'm going to show you the ones where it fades and then we get back in, which is the one that I really teach my kids. And so again, here's Bank of America, 30 days prior, you have the rally, earnings comes out. But the ones that I like and my favorite of them all are the ones where they actually come down in price. And so this is what I literally teach my kids. And so the idea here is after earnings takes place, anywhere from as early as 1 week, but really we say about 2 weeks to about 6 weeks after earnings. Okay, 2 to 6 weeks after earnings, write that down. What you will find is certain stocks that was, again, doing really well. My kids don't know whether they beat revenues. They don't know whether they had good earnings, forward guidance, and all that kind of stuff. But the one thing is, I always tell them, I said, okay, put this on your calendar, anywhere from 2 weeks, 4 weeks, 6 weeks. That's kind of how they look at it, 2, 4, 6 weeks. Okay. And this is something they can just, hey, here's a company that we know, Bank of America. Why? Because Daddy and Mommy banks at Bank of America, but Daddy and Mommy banks at all these different banks, right? And so, or if we go shopping at Best Buy or Target or Walmart, so we try to use companies that we know our kids are aware of, and then we've already done a lot of the research and make sure that, okay, yeah, this is something that works well. But for them, they just know the name of the companies because they've been there, they're familiar with those type of companies. And then we say, okay, when is their earnings? When do they report how well they did? And so the kids know that. They know that's what this blue dot is. And it's okay, now put that on your calendar. And this is something we just say, let's see what happens. And so what we're looking for are the ones that have dropped big. And then, like I said, somewhere between 2 to 6 weeks after their earnings, they tend to bottom out and then give you a nice, decent rally. My goodness, I don't know how many people pay attention to this. The funny thing is, because everybody is so worried about earnings on earnings day, by the time this thing bottoms out, whether it's 2 weeks later, whether it's 4 weeks later, whether it's 6 weeks later, by the time it bottoms out, most people have already forgotten about these type of stocks, like completely forgotten about them. And so this is where me and my kids, we say, wow, okay, we already know this. And this is why I tell people trading is not difficult. Investing in the market is not difficult, but it requires discipline and it requires being organized and having a plan. Okay. And so in this case, we already know, hey, Bank of America coming out with earnings 2 to 6 weeks after Bank of America comes out with earnings, you want to pay attention to the stock. One of the first things they want to see is they want to see, has it had a decent pullback? Decent is just, okay, something that shows that a pullback has happened. Great. Once they see that, we call this a downtrend. Has it been in a downtrend? Yes, it's been in a downtrend. Great. All right. So now we know that we can trade this, gap up and fade or gap down and reversal. But the idea is that it's gone down. We can see that it's bottomed out. Boom, we start buying. Okay. And then if you have something like this where it happens before the dividends comes out and you like dividends, you can collect dividends on that. If not, but don't get me wrong, we're not trading this because of dividends. We are trading this because of this pattern that we see. Okay. Let's fast forward here. Here's an example of one where it just rallied and never came back. And so 2 to 6 weeks after, we'd have been looking back and say, hey, where is this thing happening? We don't see a decent pullback. We'll leave that one alone. That is a total different strategy, but not necessarily the pullback one that we're looking for. This is the one right before the pandemic. We were looking forward to this. We bought this. It was doing well before the pandemic happened, and then the pandemic happened. And again, so here's where it started rallying. Everything was looking fine. And then again, wait a second, something is not right. It's not supposed to be doing this, da 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 da. Next thing we know, pandemic hits, and oh, now we understand why things were not working out well. But the beauty of this is, again, unlike earnings, there was no choice for us to do anything. We could see that something was beginning to happen, before it really capitulated. Does that make sense? Here's another one. Earnings comes out 2 to 6 weeks later. Boom. We've seen that it kind of went sideways. Then it had that pullback. Now, excuse me, now we can see, wait a second. Hey, does it have this particular setup that we're looking for? That move right there from $21 to about $29, not a bad return on your money. Okay. And again, this happens over and over and over. Here's one where it went up. You can see this, never really pulled back. When it started pulling back, okay, let's get into it. But then something happened along the way. You know what? Let's get out of this. Maybe we break even. Maybe we take a small loss. But I want you guys to see how many times it worked compared to ones that did not work. Look at this. Earnings comes out. This is one that gapped down, went sideways, looking for that reversal that we're looking for. Boom. We got this huge return. $23.50 to about $29. Really, really good returns on your money. Just watching this thing take its time as it keeps on rallying higher. Okay. Here's one. This was in February of 2021. Same thing. Earnings came out, dropped all the way down. This was perfect. You know, gave us about 2 weeks. Humongous rallies to the upside. I mean, this one we actually held for a very long time because it went to like even new all-time highs and all kinds of stuff. It rallied up until the next earnings. Look at what happened. Pull back, go up. I'm not making this up, ladies and gentlemen. This is something that happens over and over and over. The only difference is that, again, most people would have already forgotten about this by the time these moves begin. Okay. Most people would have already forgotten about this by the time these moves begin. And what we simply did was we went out there and said, okay, what are the things that we need to know that would tell us, you know what, these moves are beginning to move again? Because that's one of the biggest things I wanted to know. How can we tell? Stock comes down, rallies back up. More often than not, one of the reasons why I like the ones that pull back first before they reverse is that more often than not, what will end up happening is they will come back to the pre-earnings level. Okay, that pre-earnings level, they almost always, and I say almost always, because again, there are a few that might not happen based on market conditions and whatever, but almost always they come back to that pre-earnings level. And so even before we jump in, we already have an idea, depending on where if I got in over here, and I say, wow, I can see that this was the pre-earnings level somewhere around here. I can say, wow, this stock is going to go somewhere up to this level. Great. I can then look at that and say, do I want to jump in there and see how much money I can make before I jump in? If it's good, yes, continue. If it's not, don't continue with it. Okay. But again, what I love about this is there is no issue with announcements anymore. All right. The uncertainty is gone. Volatility is not an issue anymore. I'm not worried about, oh, they're going to make a new announcement that's going to affect the stock. This is the time where the stock can easily continue to grow. So that's why if we then start seeing certain things happen, it's like, wait a second, that is not supposed to happen. We know something has gone wrong because it's like, wait a second, this is the no announcement period, right? There's no announcement that needs to be made. Maybe they might make an announcement like, oh, Bank of America bought this company or they did that. Okay, fine. Maybe something like that. But I'm talking about things that will truly affect the stock itself from an earnings point of view that causes everybody to be panicky over earnings. What's going to happen? What's going to happen? What's going to happen? We don't have to worry about that at all. And like I said, my kids don't even know what the earnings announcement is, except for they know, hey, 2 to 3 weeks or 2 to 6 weeks after, let's look and see. If we come 2 weeks later and we notice that, wait, it's already ran away from us, oh, go find another stock. Okay. But the idea is that there are certain stocks that we always monitor and we wait to see what's happening. Okay. Here's the most recent earnings on Bank of America. Excuse me. What do you believe that we believe is going to happen to Bank of America pretty soon? Right. And this is kind of things that we look for and say, wow, let's jump into this. I'm gonna show you one more example. I have multiple examples. Facebook is another one just like that. Okay. Where pre-earnings, post-earnings, ladies and gentlemen, I mean, If you're not paying attention to these things, look at this. I'm gonna just show you this. I won't go into more details. Pre-earnest, boom, right there. Okay. Um, Again, here's pre-earnest. You can make some pretty good money on pre-earnest. Post-earnest is there too as well. Here's another one. Pre-earnest. Look at this, guys. I mean, I'm not making these things up. I hope you guys see this. And the only question you should be asking is like, how do I know which ones to jump in and which ones not to jump in? Look at that rally right there. That was pre-earnest rally right there. Okay. It happens over and over and over. And this is something that almost anybody can focus on and trade. My kids do this all the time. I do this. My subscribers do this. It's something that you guys can do as well. Okay. So again, examples after examples after examples. I can show you all day, every day. And here's Leonard Home post earnings, earnings itself. This is one of those where I love after earnings, you'll see it come down. Look at this humongous rallies that they have after earnings. Okay. Just being patient, waiting 2 to 6 weeks, maybe 4 weeks in some cases. Just be patient. Let the stock do its thing, have a decent pullback, and then enjoy a fantastic rally in price. My goodness. I mean, these are things that people, I mean, I don't know. Again, earnings comes out, let it have this pullback. You look for that setup that we look for, and voila, it helps you. Okay. So what is the setup that we use? This is where I'm going to show you. One is we have a platform that we use. And so if you use this platform that we have something called a right model. We created a model that we use that tells us when a stock is ready to go up. And so we wait for that to happen. We wait for earnings to come out. Once earnings comes out, we look for the right model to tell us that it's time to buy. Okay. If not, then I would encourage you to get, if you don't want to use the right side platform that we have, I encourage you to get our on-demand video that goes into the full course on how we trade earnings. Okay. If you go to our website, rightside.trading.com, you'll see the prices there, $7.97. Or you can just go to this link right here, rightside.trading.com/earnings, and you can get this full on-demand video. This is where we go into more details about everything. Now, what I did not tell you guys about is also, let's say company comes out with earnings and they get an upgrade or they get a downgrade. How does that affect the stock? Have you ever thought about that? And being able to see how to use that type of information to help you, be on the right side of those stocks. And I'm telling you, ladies and gentlemen, earnings season is one of the best times to be in the market, which is totally, totally different from how I used to feel, which was scared. I was scared back in those days to be in earnings season. Okay. But now, not anymore. And so we have how to trade, depending on if they come up with upgrades, downgrades, if you've ever seen them. It's funny how these analysts, they love to tell you about the upgrade. Oh, we've upgraded this stock to, this new target price and stuff like that. Well, how do you use that type of information to help you? It's important. If they give them downgrades, the same thing. What about IPO companies? I love IPO companies. We have a whole strategy, which is beyond today's course, about how we trade IPOs. But one of the things that we love about IPOs is the ones that come out with good earnings, the brand new companies, and then they have good earnings. They beat on good earnings. They beat on good revenues. They have good forward guidance. Oh my goodness. If you're aware of how to trade these earnings patterns with IPO stocks on these type of situations, my goodness. And why do we even like IPO stocks? One of the reasons why is because they are usually the ones that are able to move the best, right? They have huge moves that takes place. And maybe because, they're brand new. I mean, they're not, blue chip companies and stuff like that. So you can see humongous, I'm talking about 40, 50, 80% moves in a month, literally in a month, and sometimes 3 weeks, simply because, and this is after the earnings has been announced. So this is not because of earnings or like on earnings day. This is after the earnings has been announced, right? And my goodness, that the huge, and the same thing goes with SPACs. I mean, SPACs, IPOs to me, they're pretty much the same. So if you get this course, this is kind of like one of the things that you're going to learn. We've been dealing with a lot of bearishness in the market, and so people have been asking, "Hey, how does it work the same during bear markets, and how do we trade that?" So in this on-demand video course, we put that in there too as well. Now, in the event that you say, "Hey, wait a second, this sounds really good, but my goodness, Wally, I really want this. Can you help me out?" One of the things we decided to do was, for the first 10 people only, and I'm keeping it at the first 10 people, the first 10 people only that are serious about this, you can get an on-demand video. You pay for this today, you'll get it tonight. We'll take off $500 from the asking price, okay? Only for the first 10 people, and that's only for tonight only, all right? So I'm sorry if you listen to this tomorrow and you say, "Oh man, no." Okay, it's only for tonight, April 19th, 2022. Okay, so you don't have that much time, but for the first 10 people, we'll drop the price down another additional 500 just to kind of help those people who take action, and you can get it for $297. All right, but let me just say this: even if you don't get it for the $297, anybody who still gets it for the whole $797, it's worth it. Okay, it is worth it. The only thing I ask you is, like, have you lost more than $797 during earnings season? Okay, if the answer is yes, then this is worth it. Is it possible that you could lose more than $797 every earnings season from here on out to the end of the year? Because once you have this information, it's all yours, right? It's yours. It's an online video. You get to watch it. You can watch it as many times as you want, but the thing is, you can make that money back in no time, but I cannot even fathom why you would not be able to make that money back even in this year though. Okay, because earnings season happens every single time, and we are literally just starting earnings season. So to be able to know how to find these type of stocks, how to build your list, work on the ones that are going to help you, know what the setup looks like, all that kind of stuff, it's going to help you. Now, I didn't put this in here, but I'm also going to do this too now that I'm talking about it. Again, only for the first 10 people, I will give you access, a 30-day access to my platform, the Right Side model, Right Side platform. Okay, so you get free access to the Right Side platform for 30 days. And I think in those 30 days, you'll be able to see how to use this for the earnings season. Okay, so please. And then what will also happen, if you have access to the platform, you get to come to my Monday night analysis room. So this is where we'll probably be talking about earnings every single Monday from here until May 15th. Okay, so you'll be there with us to see how we're finding the stocks, how we're talking about the stocks. I just literally listed about 3 or 4 last night. And I say, "Hey guys, these are stocks that we should be in." All those stocks have all gone up today alone. Okay, so the idea is get this, get this, get this. Don't let money stop you. If you're thinking about it, should I not, just get it. Okay, if you have questions, you need help, we'll help you. Okay, you can email us, we'll help you, we'll help answer that. But get this. And again, I will add the Right Side platform. If you don't know what the Right Side platform is, it's just basically, let me see if I can actually show you guys this. I'm not sure if I can do this. Give me 1 second. How do I do this? Where's this thing? Give me 1 second, see if I can show you the Right Side platform. Where is it? All right, let me show you this. It's a web-based, so it's not like you need anything in particular. Just go here to Right Side platform. If you go to Right Side platform, right here, you can go in, type in any ticker symbol, and what will end up happening is that you'll see this. And I'm not going to go into too much details about the Right Side platform, but the idea here is that this would help you when it comes to picking out the stocks that we have for earnings season. Okay, and so we have screeners in here that can help you pick stocks. This right here, you see how this right model right here, this is what I'm saying, where when it starts telling you buy cover, it tells you when to start waiting and hold, you're chasing it, don't do anything. It tells you when you need to start getting out and getting insured. This is what we use to kind of help us manage the positions. If the background is red, tells us that, hey, we shouldn't be buying anything yet. But at the same time, we can see what we should be getting ready to do. All right. So that's just a little bit about the right side platform. We'll go into more details when you get that. We have a tutorial on that. You'll get a tutorial on how to use that too as well. So don't let that stop you. Okay. But the whole idea is you'll be able to help manage your positions properly, when to take profits on these earnings. And then one of the other things I like to tell people is, look, what about if you've already lost money? Let's say you put on a trade and you lost money on that trade. Would you like to know how to make some of those losses back, if not everything? Okay. So in that video course, we talk about that. So definitely a lot of benefits to help you with this. Again, so if you want to take advantage of this, go to rightside.trading.com/earnings. Now, again, you can go to the website, and let me see if I can do this again. If you go back to the website, which is rightsidetrading.com, and you go to our courses page, you'll see it on the courses page. But like I said, it's $797. So I'm not making this up. This is our courses page right here. This is our earnings situations right. This is our earnings right here. And so you can go here to our earnings and you'll see it right here. Okay, $797. That's what that is. All right, that's just a typical price. I'm not going to change it. But like I said, for those of you guys who take action, I would drop the price 500, but you have to go to this link though in order to do that. You have to go to this link, earnings.com, rightsidetrading.com/earnings, and only to the first 10 people. Okay. And those 10 people also get 30-day free access to the right side platform. If you already have the right side platform, the words, we'll add it to whenever your subscription ends, we'll give you an additional 30 days at no cost. Okay. So I hope that helps. Earning season is a wonderful time. And I just simply was a guy that learned how to take lemons and turn into lemonades. All right. And what I help my kids see is, again, when they see that blue dot on the chart, they already have it on the calendar. Come 2 weeks, 4 weeks, 6 weeks, they go to the right side platform. They know how to use it. They look for buy cover. Once they see that signal, that is as simple as it is for them. Okay. All right. I'm going to end it right there. And let's see if I can turn it back over to David and Anka. Thank you so much again for inviting me out here. I hope you guys have a wonderful rest of these sessions. Tomorrow is going to be another packed day, so enjoy that. And we'll talk to you guys soon.